Okay, real quick from last night, I went short 1 micro of the MES and I was long 1 micro of the MNQ. And right now, the MNQ has dropped a lot more than I have made up for on the other side. So we're hedging. In case you're new, these videos are to hedge micros against each other, not the same instrument, but different instruments that are kind of correlated, but do give us enough divergence to make money and in this case, lose money. So you can win or lose. Risk trading is risky. This strategy is not proven yet. I have not proven anything except I'm experimenting right now on how it works. Is it worth a try? Can I make something out of this that's consistently profitable? I don't know. So this has only been about a week that I've been doing this. So let me learn, let me have my process, and let me learn, and maybe I can make this thing possible. If not, I got my trend line strategy and my moving average strategy and other strategies I love to trade when it's time to get serious and make money after I'm done experimenting all these things with Apex. I got other strategies that Apex will approve. I don't like the dollar cost average. This is not a dollar cost averaging situation. There's a maximum limit of 500 or 1,000. You don't want to blow the accounts, but you do want to try to capitalize on the divergence between the MES and the MNQ. So far, we're down $137, 135, and we're only up 9 here. That's a huge difference. Now, if it was positive, I'd love it. And there's been times when it was a positive divergence like that when I wake up in the morning and I love it. And then I thought to myself, hey, this can also go against you, right? So it did today. And we're not done yet. We're still going to try to work this out. This could, evolve into a strategy where I get out of one side and keep the other. I might add at least one time only to each side to build, and then let it rebalance itself. And sometimes we have a little profit, sometimes we break even, sometimes we have a loss. So let's see what happens today. Okay, so this is completely reversed, and now we're profitable on the one, which is equal to the loss on the other. So we went from a negative to equal. It's balanced right now, and it's actually growing more and more. The higher this gets, the faster this goes. Since I was biased to the long side, I positioned the hedge to lose more money if it drops, because I'm biased to the long side. If I'm going to lose, it's because it's going the other direction, which is down. But I've hedged myself with something to help those losses if that were to happen. But I don't want my hedge to be so strong that if this goes up profitable on the right side $100, that I'm equally losing $100 on the. I don't want the hedge to be balanced on both sides. So I hope that makes sense. And there's times to take profits. There's times to readjust. There's times to add to one side. There's times to take off from one side. But you always have your stop loss limit in mind, which is 500 or 1,000 or whatever yours might be. And you don't want to blow the accounts just to blow them. So, all right. So right now, if I close it, we're profitable a few dollars. I'm not going to do that. I'm thinking about adding over here. Because this side moves so slow that if it does drop, I want to do better on the downside. And I don't want to put too much on the hedge on the left side to perfectly balance out the positive benefit that's taking place on the bull run. Okay, I always want to make sure that there's enough of an imbalance and enough of a divergence. And there it is. Look at this thing go. Wow, this is amazing. And now I wish, well, it looks like it wants to go to yesterday's high, or it'll stay an inside bar. So now you can see right here we're up $100 or around $100. And over here, even after the add, we're down 50. So we're still net positive because of the divergence. But there's a point where I could probably just take profits, because I don't want, and then reassess the situation and figure out what I want to do, right? So I don't know all that yet. I'm still learning. Maybe I should have just taken my profits right there. I'm interested in seeing how everything works out over time because this is, like I said, new to me. And, maybe I should have added 2 here. And when it gets down, take a profit, believing in the bias to the long side more and make those adjustments. And then once I'm out of the hedge, it's just a one-sided trade at that point. So I like incorporating hedges in and out of my trades. And I don't have to keep a hedge on at all times. I don't have to always be in a hedge, but I can see where it's beneficial. I really can. And it can soften the blow of the losses. It can make you extra profitable if you're right on the side and you're able to capitalize on the downside from the hedge itself, getting out of it little at a time, getting back in it when you think, you should. You don't always have to stay in the hedge is what I'm saying. So I'm learning all that. So I'll let you know how this video develops. Okay, one more quick little notation. Now we have only a $20 profit and dwindling. If this doesn't keep going fast, this decides to speed up with 2 micros instead of 1. It's more closely balanced. So that's why we're getting back to almost a perfect balance here in price. Almost $40 here and less than 60 over here. When it was a $50 net profit, now it's down to like 20-ish net profit. And like you saw earlier, it was we were negative, over $100 because the spread had gotten out of hand, negatively over $100. Then we went up positive $50. And, it's curious to watch it, especially before lunch. After lunch, you got to be more careful about getting out of your trades and not staying in too long. But you've got the whole day right now to figure this out and watch it. And that's what we're really doing. We're watching all the many different developments and extremities that can take place with this, and that's a good training ground for us. So I'm interested to see how this turns out. All right, I'll go ahead and put this in the video. News came out. I don't know what news it was, but it's interesting to see price action, how it moves with certain kinds of news, how it doesn't move with others. And it may be that if we're net positive, to go ahead and just close out the net positive. Another option I was thinking is, can I outsmart the market? We always think that, don't we? But what I'm thinking here is I can keep adding, which is very dangerous, to this side, and keeping this average real tight to current price development, right? Any kind of dip down will put me in the green, and I can close out some of those positions or close out the whole thing or just go back to 1, and I would have made money on that trade while this is still green here, right? So both sides would be green for me. The only way to do that when you have, contradictory directions is you have to add to one side, and it can be risky. It can be. I got 2 right now. I tell you what, if I have 2 right now and it drops down into profit territory, what I could do is, that was the point of me adding,
Order submitted.
so that I could raise the average price. The point of me adding was seeing, since how this side was so much more than the other one. The other one was barely moving. I decided to add more to this side because of that. All right. And sometimes this one's moving fast. And honestly, this one is sitting still in some kind of consolidation. That happens. That can and does happen. So today I noticed that the right side, the MNQ is moving faster than the MES on the left side. Let me throw on an extra micro. Let me keep price. I feel comfortable with the risk of adding because of the price action and the momentum and the way it's moving. What could happen is a devastating backfire where I'm adding 5 micros and it moves up quickly, and now I'm down 300 or something. It moves up crazy, and I didn't get out when I was supposed to. I held too big. I don't want to do that. So right now I'm positive on the left side, and I could take off 1. Say I made some money on the trade, and then just get back into 1 position, add that 1 back if it goes higher, and keep toggling between 1 and 2. As long as I'm profitable when I sell, then I'm okay with it, right? So that's another option. That's another strategy type of hedging that I'm very, very interested in doing. Okay, I went ahead and closed it. The $50 price difference came back, and then it went to 60. And then what did we end up getting? I guess I did get 60. I was hoping I'd get more. I had a $70 spread on it. Almost 100, almost 40, so over 60. And I was like, you know what? Let me take that. Let me finish the video on this particular trade, and I might get back in it with different trades. But you got some of the ideas and concepts. This is what I'm exploring, is a good word, and experimenting with. So I'll see you in the next video. Take care. Peace. Okay, this is exactly why I wanted to try a new trade. I went long first. I put on the hedge later. I wasn't intending on putting on the hedge, but after it spiked up really hard over here and gave me $100, I said, you know what? What if it pulls back? Let me go ahead and throw on a micro. I'm happy with a $100 profit right now. And now I'm back in a hedge, but I have a cushion already. Now, as we saw when we came in this morning, I could lose that entire cushion and profit, and it can go negative on me. That anything can happen. Absolutely. I'm not saying it won't or couldn't, but at this point, the probability is in my favor that I'm doing okay with this hedge now, especially after gaining a profit already on one side. I like that the best if I can. So maybe I'll, start doing that more, where I'm biased already, take a little profit, then put on the hedge to kind of cover myself. So that sounds like a good way of thinking. Okay, let's see what developed. The whole $100 had come back down to zero, bounced off my average price. While this is, well, it's just exploded up to 40. It was about like 28.30, which was some profit, but changing $100 for $28 or $30, now it's 40. But this is dropping below, so now this side would be losing while the other side was gaining, which makes you think, yeah, it was a good idea that I added to this right here. My whole reason for being in the trade up high like this is I was chasing it to the highs, and it did cross the highs. And since it's crossed the highs, it's had a little fall back, right? And now it's coming back down. So I'm trying to reason my way through this and understand my thinking and emotions and ideas and why. I do believe that it might stay bullish and stay green today, even though it's an inside bar day, that I would be willing to build my position if it comes down for another run up to the high. I like this move here. Do I think that's going to collapse and go down below the low of the day? I don't think so. I think the probability is that it'll either be a range or stay bullish. And with this one, you just want to take profits whenever, if that's what you really think. But right now, I'm in a position with this hedge that one side or the other should stay green. So there's no reason for me to get out of it at this point. So I'm going to keep letting it develop. Okay, so what happened? Well, this thing has basically, now I have $50. Both sides are green, which is amazing. I'm sure both sides could be red, and I think I have seen that. I don't like that at all, because that's the worst. But once, maybe sometimes you figure you hit the highest this trade's going to give you at this moment for this particular day. That's something that needs to be understood and mastered and worked on perceptually in this, because you could take one trade and hold it all day long and see all these different things that developed and worked out and could have done and would have done and should have done. But holding the same trade throughout the whole day may not be the best way to do it, right? So at this point, when I had $100 profit, taking that $100 profit on this particular kind of day, inside bar day, heading towards the previous day's highs, once it gets to that high level, make an adjustment. And well, that is kind of why we went short, because we were expecting a pullback, and it did pull back. And I probably could have closed that and made a profit and wait for it to come right back up to the same price to sell it at the same price after taking profit down here. These are all plausible concepts and ideas. Right now, we're almost back up to 100. I'm going to close, and I'm going to close. Now let's take a look. Well, it's the same accounts, so there's no way of seeing how much I made on that particular trade unless I remember what I made on the last one. But we're up $189 and we're down 44. To me, that's pretty good. I like that. Almost $150. And it's possible to make more. It's also possible to just stop trading. So okay, I just went long again for this breakout, and as soon as it gave me $50, I sold this over here. This is not broken out yet. This one over here has, and when it did, I went ahead and jumped on it. We'll see what happens. We'll see what happens. Okay, see, when it broke back down here and fell below that previous days, I added one, and then I closed both of them down here for close to $45 or $50. Probably could have held one of them. I probably could have held one of them. This is falling below previous day's levels, so this thing could do anything. It can come crashing down if it wants to. So I'm unhedged to the long side, thinking that that's the better move right here. I don't believe it's going to come crashing down at this point. And I got back in short. What I noticed was well, the first one I added was here, the second one was here. When price fell below both of those, I closed both of those. And I ended up adding back the one here that I first was in, way down here at a better price. So I'm in the same situation I was in before, except I sold those two higher ones down lower for a profit, and then I got back in the single at the lower price. And so I like that. I like that. Let's see how this is working here. And something else I need to record is that somehow we're doing this right here where we are positive 200 and that negative has dropped down to almost break even. So that's pretty cool. Yes, trading that account back into the green is interesting, but I don't know how this is going to end. So we still have to wait and see how all this works out. One possible and negative scenario that could happen is I could get out of my hedge on the long side, take profits when it drops, and then on the right side, give back all my profits and never make it back and even hit my maximum stop loss for the day. You would say, how could that happen? You know, well, it could happen with me staying in the trade too long, right? And if I were to get to the point where I gave back most of these profits right here, then it starts to turn red. Then if I stayed in that trade, I would be giving back all my profits, trying to stay long, trying to make it work. When the market reversed on me and I'm not even hedged, there's no short position to help out, right? That can happen. So these are the kinds of things that experience and practice daily, getting an understanding, getting your hands in there is so important. But I can see that happening. I can see that happening. I don't want it to happen. And so how could I avoid it? Well, stay hedged. The closer we get to the lunch, I either want to be hedged, get more fully balanced hedged, or just get out of the trade and be done for the day since we're up a couple $100, right? There's nothing wrong with that. Having to be in a trade, having to continue to trade and always be trading is not professional necessarily. Now here's exactly what I'm talking about. This shot down plus $80. That was good. I almost took the whole thing. And what I really should do is just buy back one of them. I think that's what I'm going to do. I'm going to stay in one. Too many times have I gotten out of the hedge and I wished I didn't, and it just kept going, and boy was I mad at myself. I think staying in a hedge, at least unbalanced, is important when price goes against my overall bias, right? So that's why. If everything's going in my favor towards my bias, then being unhedged is not that big a deal. Getting out of the shorts on the left side when they make profit, closing them all down is okay. But if I'm unsure that price is going to bounce, or if I think it's possible to go against me, because see, now look at what we got here. Now where we were short at first, where we were red at first, has become the profitable side, and this was up to $200 at one time. Like I said, it can go red, but I don't want to be red for the day. Like, I don't want to lose my profits so that both of these together make me a red day. I'm still green. Even if that one side turns red, I can still be green for the day because I'm more green than red, so that balances out, right? So, like I said, very interesting to keep watching, keep learning, experience every possible wild situation you can, and try to be an expert and master the markets as best you can. Okay, this had gotten down to like $2, and this was like up to 147. Closing everything at that point to stay green on both accounts was tempting. And I'm very interested to see, if this goes red, how far red will it go? Will it actually go so red that it takes all my green and then I end up with a break-even day because I have to close it at that point? That's all possible. Very, very much so. So we lost everything on this side. Now it's red. But this side can keep growing as long as I'm hedged. But it won't grow as fast as the right side loses because the NQ can put on more momentum and move greater distances than the other side. That's why I like to use 2 micros with the MES when I really want to try to stay hedged. Sometimes 3 micros, and then sometimes 1 is enough. And that's judging the markets and trying to read both sides and their behavior for the day. It can be tricky. So I'm either going to end the video now or I will let you know how the balance ends up. But I think that's enough for one video. We'll see you on the next video. Take care, everybody. Peace. Okay, I have officially turned it red, meaning, well, it was. I don't know what's going on here. I thought for sure that I had turned red here. I think it was. I think this was down like 190, and this was, not as low or whatever. Anyway, most of it's gone. I mean, right now I got about $60 out of the 150. So I'm really just kind of letting it play out now because I want to see the whole cycle roller coaster ride and what ends up transpiring towards the afternoon, because it's only 11 a.m. 90 minutes of the day, and if I just trade 90 minutes of the day and get some good profits out of it, I should be disciplined enough to just stop trading in those accounts. And if I want to trade, use some other form of trading possibly. But no one likes to give all their green back for a red day. No one likes that, and I have done that plenty of times. So I'm curious as to when I'm eventually going to make decisions that cut my trading off when I'm profitable. I mean, I would imagine at some point I need to get that way, and it could be that it takes a while, or I could just start doing it. I like to trade, though. That's my problem. I like to trade. I like to be in a trade. I like to be challenged by the market. I like to try to outmaneuver the market and guess where to put on trades and hedge and all. It's fun, but it's not fun if you start losing real money. And these Apex accounts hopefully will be real money one day. Okay, right now my goal is to keep adding to this short side. If it goes up here, I want to add and bring that price up. Meanwhile, this deficit will be getting less and less, and I don't even know if it'll ever get back up to this point right here. This account may end up in the red. It would have to get back up to yesterday's high and back up to that level, or I could add, bringing the average price down. But real quickly, can that 284 turn into 584 real quickly? You got to be real careful about adding 2 and 3 micros. If it goes against you, you hit your maximum loss pretty quickly that way.